Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. If you are interested in electric vehicles, it may not be the time to buy electric vehicle stocks. They're very expensive right now. There's a ton of competition coming into the market. Margins are under pressure. And I just don't know if there's a lot of gains to be had for investors in those stocks. But that doesn't mean there isn't opportunities related to electric vehicles. I have covered on this channel that I'm not a fan of the electric vehicle charging companies. But one area where I think we are going to see tailwinds is in electricity production and the utilities that are actually providing electricity to homes, businesses, EV charging stations. They're going to be the ones that see the increase in demand. And a lot of these companies are regulated utilities. They have unregulated arms, and they're going to just see a general tailwind behind what they're doing. And now with higher interest rates, there's less chance that they're going to be disrupted by newer technologies, which are now harder to finance. So I want to go through 3 opportunities today that I think could be really great bets in a basket for investors looking at utilities. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And the sponsor of today's video is The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I want to go through the 3 stocks first and just cover some of their general metrics. The first one is the Southern Company. This is a company that has utilities in the South. All of these companies have both a regulated business and an unregulated. A regulated business simply means that it's effectively a monopoly for distributing electricity in a certain area. And then as a result, rates get set by regulators and the company gets a specific rate of return on their assets. So if they need to build a new power plant, they need to run that by regulators. And then they need to agree on what the cost of electricity from that power plant is going to be. I'm oversimplifying things, but basically it's a very steady business, but not necessarily a great growth business. But that doesn't mean you can't get great returns if you buy at the right price. Right now, Southern Company has a price to earnings multiple on a next 12-month basis of 17.3. Enterprise value to EBITDA on a next 12-month basis is 13. And I think the tailwinds behind this company specifically are really strong. The South is growing a lot more than a lot of areas in the US, specifically areas like Atlanta, Georgia. That's also an area where you're going to see more electric vehicle adoption. And there's an opportunity to potentially grow that unregulated side of the business with things like wind and solar, which are also increasing adoption in that area. The next one on the list is NextEra Energy. This is the company that has a large percentage of the utility customers in the state of Florida. It also has a very big unregulated business, operates NextEra Energy Partners. And as a whole, this company is one of the biggest renewable energy owners in the world. From a valuation perspective, next 12-month basis, price earnings multiple is 21, and the enterprise value to EBITDA is about 15. So very similar multiples to what we see with Southern Company. Dividend yield is 2.8%. So again, not the best dividend yield you're going to get, but this is a utility, so you can expect that to just grow steadily over time. And again, I think the tailwinds in the South and specifically in Florida are going to be really strong for a company like NextEra Energy. So that's just going to drive the company's demand, regulated side, and the unregulated side of the business. The final stock to look at is Xcel Energy. Xcel is not necessarily the same growth story as Southern Company or NextEra Energy, but it's just a steady company operating mostly in the Midwest. This is my electricity provider in Minnesota, so it operates Minnesota, Wisconsin, Colorado, a few other states. And what you're seeing is slow but steady increases in electricity demand and not as much competition from things like solar rooftop energy production. So that's an area that has been very disruptive in a state like California. That's not an issue as much in Xcel's areas that they operate. Also a little bit cheaper stock. On a next 12-month basis, price to earnings multiple is 17 and enterprise value to EBITDA is 11. So the cheapest of the 3 stocks that I've covered here also get a great dividend yield of 3.5%. Now that we've gone through the 3 stocks and why I'm excited about them, I just want to cover broadly why I think this is an opportunity to invest in electric utilities right now. Historically, over the last 100 years, electricity demand in the US has grown at about 2% per year. That has actually changed in the last decade or so to growth of only about 1% a year. The reason for that is we're starting to use more efficient devices in homes and businesses. LEDs are far more efficient than traditional light bulbs. We're using more efficient TVs, more efficient refrigerators, more efficient air conditioners. That means that demand growth has effectively stagnated. But this is going to change with electric vehicles. And there are a number of different estimates out there. But one that I saw recently was that electricity demand in the US could grow 3% per year for the next couple of decades. So this would actually be an acceleration of growth in the industry. That means there's a need for more power plants to be built. That's the unregulated side that each of these companies will be building. There's going to have to be more distribution, more transmission, more investment in infrastructure on a local level. That's what the regulated utility business would be doing. And so generally, there's just going to be more growth in the utility business. So if you have a leader, like I think these three companies are in their specific areas, there's going to be better tailwinds over the next 20 years than there was over the last 20 years. And I think that's the big shift that's going on in utilities today. But what do you think about utilities as a way to play EV growth? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.